Hello everyone, I'm Martin Tuganda III of IMG Makati, and I will be your speaker for this session wherein we will be discussing all about mutual funds. First, let us go back to what are the stages on how to manage money. Siyempre, we will be starting with a very basic, which is kumita, or to make money. Then, after earning money, we should be able to save a portion of that money, grow that money, or invest that money. Again, there's a big difference between saving and investing. Saving is just keeping aside your money, not very particular on the interest that you will get. Investing your money is growing your money. At least we put our money on a facility that will grow more than the inflation rate. And of course, the importance of securing or protecting your money. So, again, first, making money, saving, growing, and eventually protecting that money. First, let us define what investment is. So investment, it says here, it is an asset that is purchased with the expectation that will generate income or appreciate in the future. What do we mean by that? So we purchase something, we buy something which we consider as an asset because it will later on put money on our pocket, provide us earnings or profit because we expect that later on or after we bought that, it will give us income or the value will appreciate. A very common example among us Filipinos is purchasing a house with the purchasing a lot with the expectation that later on the value of that lot will appreciate or pwede nating ibenta sa mas mataas na presyo. First, let us clear the definition. What is an asset in contrast with liability? So, asset is something which puts in money to your pocket. However, liability is something which what takes out money from your pocket. Example, a car could either be an asset and it could also be a liability. Liability in a sense na pwede namang mag-commute or mas practical na mag-commute on your case from office or from house, from where you live to work to your workplace than driving a car. And lalong-lalo na if yung nature ng work mo is not related to marketing or not really needing that you drive a car. So on that case, it's a liability because it takes out money from your pocket. You, say for example, you get a loan in the bank. So kukuha siya sa sweldo mo ng pambayad sa loan or pambayad sa utang mo sa bangko, pambayad sa pagpa-change oil, pambayad ng maintenance, pambili ng gasolina, pambayad sa parking, etc. However, it could also be an asset. Say for example, pina-Uber mo siya or pina-Grab mo siya or ginawa mo siyang service. So in this case, it now puts in money to your pocket. So there are three concepts involved when we're talking about mutual funds. Number one is the sense of ownership. So very important that if we invest, we are considered as the owner. Unlike if we put our money into the bank, they call us depositor, hindi owner. Why is this? Because when we invest in mutual funds, say for example, we put in 5,000, that 5,000 will be converted to number of shares or sometimes you call the stock. So as a result, ang tawag sa atin minsan ay stockholder or share investor. So this means you own a stock or a share of that company. In return, in a sense, you become a part owner of that company. And third, it's very important that if we invest in mutual funds, it should be on a long-term period. Say, for example, at least 5 years. We have to know that the market is something which is fluctuating, which is not stable. So long term, so that we cannot feel yung mga years or instances ng market ay negative or sobrang baba. Those falls in the market would be mitigated by the ups or the overperformance of the market in some years. Example, you invested 5 years, dalawa doon, negative ang market, tatlo, positive. So likely, yung returns mo when we compute it long term would still be positive. So again, the concept of ownership, number of shares that you get every time you put in or add up to your mutual funds, then it should be long term. Kasi yung iba, hindi pa nga nakaka-open ng mutual funds, ang tanong kaagad, kailan ako mag-withdraw? How does it work? So a mutual fund, it says here, is a money pooled from a certain number of investors. Each fund has a specific mandate or purpose and a professional fund manager who invests the money based on the specific strategy and goal of the fund. So later on, we're going to be discussing the kinds or types of mutual funds. So let's dissect this definition. So mutual fund is a pooled money. Why is this? To invest directly on the stock market, brokers, papansinin ka lang nila if you have big amount of money. Say for example, 5 million or likely dapat 10 million para lapitan ka ng broker. The question now is, how many Filipinos could afford to have an investable money of 5 million or 10 million pesos? Bilang na bilang. So what mutual funds did was, okay, let's set the minimum at 5,000. Ilang Filipinos ang makaka-afford to invest 5,000? Marami. Example, 1 million or 100,000. Okay, 5,000 pesos times 1 million people, that's how much? So that's really about a big amount of money, right? So yung pooled money na yun, yung nanlikom, yung total na money na nanlikom, that will be handled by the mutual fund, which in return would be managed by a professional. We call that professional a fund manager who will now invest our money accordingly kung anong type ng fund na pinasok natin. Example, if it's bond fund, so more on government securities. If it's stocks, more on publicly listed companies or equities. So it really depends on the type of mutual fund that we have, because yun ang basis kung anong magiging strategy nung fund manager. Okay, how does it work? So, eto tayo as investors. So each of us will invest, and the amount that will be pooled, or each of us na mag-i-invest, that particular amount of money would be converted into number of shares or stocks. So that pooled amount of money will be handled by mutual fund company through its fund managers, who will now decide where to invest our money accordingly to what type of fund that they manage. So it could be either stocks or bonds. And the growth from these investments would now be returned, if the investors would redeem, accordingly to the amount that they invested. So example, on that particular year, that fund has a yield of 10%. So, mas malaki yung matatanggap ng 100,000 ang invest compared doon sa 5,000 lang. So again, here we are, the investors, the mutual fund company, and the fund managers who are responsible to invest our money, so that with a goal that our money will grow. One technique that is involved in investing in mutual fund is what we call money cost averaging. So, ibig sabihin, mas maigi na staggered ang pag-invest natin compared sa isang bagsakan. In this example, the monthly investment is 100 pesos. So in mutual fund, the number of shares would be dependent on the price per unit, or sometimes we call the net asset value per share. So 100 pesos divided by 100 pesos per share would give us 1 unit or 1 share. So we've said a while ago that the stock market is something which is volatile, something which goes up, down, up, down. On the second month, the net asset value per share went down to 50 pesos. So with the same monthly investment, we're now able to have 2 shares. So mas mura yung net asset value per share, mas maraming shares ang mabibili natin. So on the third month, it further went down to 25. So with the same monthly investment, we now have 4 shares, 5 for the total number of shares that we've accumulated in a span of 6 months is 18. So what if magre-redeem ka on the 6th month? Of course, we don't encourage that, but for the sake of this example, to show you paano tayo kikita, so the number of shares, the computation would be the number of shares, we have 18 here, so 18 shares, times the price per share on the time that you will redeem or withdraw. So in this case, it's 50 pesos. So 18 shares times 50 pesos per share will give us 900 pesos. So the total amount that we invested is 600 pesos, giving us a 300 peso gain on a 6-month period, or that's over 50% growth, or 8.33% growth per month. So mutual funds give us the opportunity, the average people or the middle class people, to also invest where the wealthy are investing. Because it allows us, mutual fund allows us to pool our money to generate a big amount of money para mai-invest ng fund manager. Then these fund managers are professional, they're focused, they have authority, they have access to the ins and outs of the investment industry compared to kung ikaw mismo yung mag-manage na may 8 to 5 work ka pa. And another important aspect of mutual fund is diversification, because they invest their pooled money in many different companies in a variety of industries. So maraming kumpanya, tas iba-iba pang sector or iba-iba pang industriya. So us, as investors, we own shares in proportion to our investment. So mas malaki yung in-invest natin, mas marami yung number of shares. Then, in effect, in return, we receive proportionate shares of earnings accordingly to the size of our investment. In summary, these are the advantages of mutual funds. So we mentioned professional management. So siling tao na dedicated, aral, they have authority, they have access, say for example, to Bloomberg, to manage our money. Because ang pinaka-goal naman talaga nila is to grow our money. Second advantage of mutual fund is diversification. So unlike kung nagsa-stock trading ka, example, you bought PLDT shares, kung bumagsak or bumaba ang PLDT, clearly bababa yung market value ng fund mo. What if yung mutual fund natin ininvest sa 10 companies, may bangko, may real estate, may transportation, may commodities, may healthcare, iba-iba. So, hindi naman lahat ng industry na to, kung ang isa bumaba, bababa lahat. So, diversified. So, it proves the common line that we always hear, don't put all your eggs in one basket. So, third advantage is liquidity. Unlike kung mga ilangan ka ng pera, ibenta yung bahay mo, it will take months or even years to find out a buyer of your house or a buyer of your lot. Unlike some mutual funds, if you would redeem, it will just take 7 banking days. Tapos yung proceeds nun from shares converted to cash, ando na sa bank account mo. Then low investment minimums. Some funds even farther lowered down their minimum investment from 5,000 to 1,000. And ease and convenience. This is just like opening a bank account. So yung forms, mada-download mo, just print them out, fill out, sign, then isubmit natin together with the additional requirements. Later on, we're going to discuss that. These are also the disadvantages. Well, we have advantages as well as my disadvantages. Number one, just like any investment, the returns are not guaranteed. Of course, sabi nga natin, there's always a risk in life. But, if we play too safe, delikado din yun, right? If you play too safe, okay, sa bangko ko na lang ilagay ang pera ko, tumutubo nga ng 0.252%, pero in effect, lugi ka. Kasi ang inflation rate between 4 to 5% in the last 3 years. High risk, high returns. Low risk, low returns. Or zero risk, zero return. Minsan nga, negative pa. So fees, there are fees involved. So may entry fee na tinatawag in return sa pag-manage ng pera natin. But if you are an IMG member, all of these fees I mentioned are waived. Usually, ang loading fee or ang entry fee ranges from 2% to 3.5%. Example, you invested 10,000, so 3.5% of that or 350 pesos will be deducted from that amount. So, in effect, 9,000 plus na lang yung i-convert to number of shares. Since may risk na involved, there is a possibility to lose money. So, ma-realize mo lang yung loss na yan if mag-redeem ka. Pero if not, that's just considered as paper loss. So, these are the types of mutual funds. So, first, we have the bond fund. Sometimes, this is called fixed income kasi yung fluctuation ng interest sobrang minimum. So this type of funds invest on government securities. So kaya siya play safe. Example, may project si PWH, they release bonds or telling, okay, 3.5% in a span of 5 years. So the important thing to take note on this is bond fund or fixed income invest on government securities. Unlike for stocks or equities, they heavily invest on publicly listed companies or blue chip companies. Balance is in between 50% bond, 50% stocks, or 40% bond, 60% equity, or the other way around, 60% bond, 40% equities. So in terms of risk, highest would be on the stocks, second would be the balance, and least would be the bond fund. So these are the mutual fund companies that IMG is affiliated to. So we have Philam Assets, we have Solibo Funds, we have Atrum, we have PhilEquity, Sun Life, and Metro Asset Management, which is a subsidiary, First Metro Asset Management, which is a subsidiary of Metrobank. So these are the initial forms needed to open an account. So per fund, this details you could find in the website of Ramver Financials. So you can go to this URL, www.ramver.com. So you can check for updates, the historical net asset value per share. You also have the fund fact sheets and prospectus. Basically, all the details, all the information you need to know about a fund. Then they also have the forms and requirements. And for those who are existing clients, they have their own online portal link which they can monitor their mutual fund. Then you can also download forms Example, you want to open PhilEquity Fund Inc. So you go to PhilEquity Management Inc. Then choose the click on the account opening form for individual. Then the requirements would be this: initial forms, valid IDs, your identification number or SSS number. All of these details you should be ready because they will be asked in the forms. Then for initial payment, we have these following options. You can have it cash submitted or paid to the IMG cashier, deposit to any of the IMG accounts, bank accounts, or it could also be a check. But important to note that the check should be payable to the specific fund, not to the mutual fund company. For initial payments, these are the IMG bank accounts. Same with the initial payment. So these are our options on how to pay. Then these are as well same bank accounts of IMG, which you can remit or deposit your top up or subsequent investment. Then for additional investments, we have a lot of options. It could be either over-the-counter deposit, or you could also do it online. For redemption or equivalent to withdrawal, if you have a savings account, so all of these details you can find in the website of Rampver Financials. And say, for example, you want to have a statement of account or certification request. Example, you're applying for a visa. Alternative to bank certificate, you could also request a certification of investment from these mutual fund companies. Some of them charge, have a particular charge. For HM and FAMI, that would be free. Then for account update, say for example, you changed address, you changed email, you changed a contact number, it's very important to update them by updating through these forms. Say for example, you get married, so fill out this form and together with the form, submit a proof of that. Say for example, if you get married and you're a woman, so you change your name, so submit a marriage certificate for that. So we always go back to the concept of a solid financial foundation. Investing on mutual funds is considered as level 2 investing. Why? Because before we invest, it's very important that we are taking care of already of the lower blocks of the financial foundation. Hindi pwedeng nag-invest tayo kaagad na wala pa tayong short term or hindi pa tayo nakapagsimula ng long term healthcare natin. Hindi tayo pwedeng mag-invest kaagad if walang any form of life insurance. Or very practical, hindi pwedeng mag-invest kung lubog pa tayo sa utang. Lalo na personal debts. Like kung may 5-6 ka na utang, bayaran mo muna yon kaysa mag-invest ka. Kasi that's 20% a month compared to the returns that you will be getting on your investment. So we always build from the ground going up. So it doesn't mean, however, na dapat tapos mo na to, tapos mo ng insurance mo, tapos mo na to, yung emergency fund mo before starting to invest. Pwede namang nagsimula ka na rito, tapos isabay mo na yung pag-i-invest mo sa mutual funds. So the level 1 investing is almost all of us started with Ultimate Kaiser Health Builder because the 3 blocks, namely healthcare, life insurance, and investment, are covered by this product. So you have investment, you have healthcare, lalong-lalo na long-term, you can use 60 and beyond, and it also has life insurance for the first 20 years. And I would like to end this discussion with this. Financial education is not just for the wealthy, it's for everyone. When I was starting in IMG, when I was inviting my friends, common reply would be, Marjun, wala akong imamanage na pera, lubog pa ako sa utang. So, ang tamang reply dun is, kaya nga tayo mag-aaral, kaya nga tayo, we will exert effort to learn financial concepts para ma-address kung ano man yung financial challenge natin ngayon. Again, we should be getting out of that mindset that financial planning or financial education is just for the wealthy. It's really for everyone because this financial education would bring us, diba, from poverty to becoming wealthy. So that's the beauty of IMG Business. It's not just for the wealthy, it's really for everyone. I hope you learned something, and I would really much appreciate, which is the most important thing, that we execute whatever we learn. So thank you very much.